If you're losing money right now, this video is for you. Maybe you finally took the step. You put in your hard-earned money, and now you're watching the numbers go down, and you're thinking, did I just make a huge mistake? Stay with me, because what I'm about to share could completely change how you see this moment. Here's the truth. Every serious investor has been exactly where you are right now. Every single one. Warren Buffett has seen his portfolio drop by billions. People who are now financially free started out losing money too. The difference between them and those who quit? How they reacted. Because losing money in the early stages of investing doesn't mean you failed. It means you started. And starting is the hardest part. Before we go deeper, if you want more honest, practical financial tips like this, hit that like button and subscribe. I'm Jonathan Allen, and I've spent the last 9 years studying how money works, what actually grows wealth, and what quietly destroys it. I share everything I've learned right here, so you don't have to spend years figuring it out alone. Now, let's talk about why losses happen and what they actually mean for your financial future. Markets go up. Markets go down. That's not a bug in the system. That's the system working exactly as it's designed. Think of the stock market like the ocean. Some days it's calm, some days there are waves, and sometimes there are storms. But the ocean doesn't disappear. And historically, it has always recovered and gone higher. When you start investing, you're often buying in during a period that may dip before it rises. That's not a sign you picked wrong. That's just timing, and timing is something none of us can fully control. Here's what causes those dips: interest rate changes, inflation reports, global news, company earnings, investor sentiment. The market reacts to all of it, sometimes logically, sometimes emotionally. But long-term, the trend has always been upward for well-diversified portfolios. So when you see red in your portfolio, remember, you're seeing a temporary snapshot of a much longer story. Now, let me say something that most people never think about, and it's quietly costing them every single day. When you leave your money sitting in a regular bank savings account, you feel safe. But here's what's actually happening. Inflation is slowly eating away at its value. If inflation is running at 3% per year, and your bank is giving you 0.5% interest, you are losing purchasing power every single year. The money is still there in numbers, but what it can actually buy? That's shrinking. That means the money you save today will buy less groceries, less gas, less of everything 5 years from now. Real financial growth doesn't come from keeping money still. It comes from putting it to work. Investing is how money grows. Leaving it in the bank is how it quietly loses value over time. Here's a shift in perspective that changed everything for me early on. A loss on paper is not a real loss. It only becomes real if you sell. When your investment drops 10% and you panic and sell, that's when the loss is locked in. But if you hold, you give the market the chance to recover, and history shows it does. People who panic sold during the 2008 financial crisis locked in massive losses. People who held, or even bought more, eventually saw those same investments multiply. Seeing your portfolio go down is uncomfortable. I won't pretend otherwise, but it's a sign that you're in the game. You're building something. The discomfort you feel now is part of the process. So what should you actually do when you're in the red? 3 things. First, zoom out. Don't look at daily or weekly charts. Look at 5-year and 10-year charts. You'll see that most downturns look like tiny blips on a long-term upward trend. Second, stick to the plan. If you chose your investments thoughtfully, don't abandon them based on short-term movement. Emotional decisions are the #1 wealth destroyer for beginner investors. Third, keep adding money. This is called dollar cost averaging. When prices are lower, your money buys more. So dips aren't just a problem. They're actually an opportunity to accumulate more at a lower price. Investing is a long game, and in the long game, patience is the strategy. Now, if you're just getting started and you're not sure where to put your money, I've put together a step-by-step beginner's guide that walks you through exactly how to start growing your money. It covers 24 alternatives to keeping your money in a low-interest bank account, options that have the potential to actually work for you over time. And the best part, you can start with as little as $100. The link is in the description below. Go at your own pace and start building a foundation that your future self will thank you for. So let me leave you with this. Investing rewards patience, not perfection. You don't need to be an expert. You don't need to time the market perfectly. You don't need to start with a lot of money. You just need to start, stay consistent, and give your money the time it needs to grow. The fact that you're watching this video tells me you're already thinking differently about money than most people. That matters more than you know. I'd love to hear from you. Drop a comment below and tell me, are you currently investing or are you still figuring out where to begin? I read every comment and I'm happy to help point you in the right direction. I'm Jonathan Allen. Thank you for watching, and I'll see you in the next one.